You just heard that the December trade deficit data has actually been positive. So the trade deficit for India has narrowed to $10.14 billion versus $17.2 billion year on year. And this is because of a fall that we've seen in the imports and a rise in the exports. Shankar Acharya of ICRIER joins in to discuss not just the trade data, but a whole host of other important macros as well, something like inflation that will be released next week. Mr. Acharya, good morning and thanks so much for joining us. First, if you could just give us your comment on the trade deficit data itself, the narrowing of it, and what you expect to see going ahead.
Well, it's certainly encouraging. I haven't had a chance to look at the details, but I assume it's related partly to continued subdued imports of gold, and also the fact that we've had softening of oil prices in the last month, which let's hope will continue. On the export side also, we had a pickup a few months before, which is still continuing, which is very heartening. Okay. I think on the...
sure.
Sorry, go on.
Sure, go ahead, sir.
No, I mean, why didn't you ask?
Okay, then my next, actually my question is possibly just going to be on inflation, Dr. Acharya, because we have seen some comments come in from Dr. Rangarajan where he has mentioned that maybe WPI inflation has peaked out, or inflation in general might have peaked out, and he's expecting WPI inflation for December to come in at 6.5%. Do you have any sort of estimates you would be working with on the CPI and WPI, and how much of a relief do you think that we could see on account of food inflation petering off?
Well, as you know, there have been a lot of anecdotal reports that in the last 2-3 weeks, the prices of fruits and vegetables have come down a great deal. But we still don't know what it all adds up to. We will know next week, both in the context of the CPI and the WPI. I think it's reasonable to expect that there will be a moderation from what we saw in the previous month, which was, as you recall, an uptick from already high levels. And at that time, if you recall, everybody expected the RBI to increase the repo rate, but the RBI didn't. Now, I think if we have a significant fall in the prices of fruits and vegetables, which gets reflected in the CPI and the WPI, then quite possibly the pause in the repo rate will continue. Otherwise, you will recall that the Governor RBI had warned that he may have to, in the January review of monetary situation, consider a further increase in repo. But right now, I think that we'll have to just wait and see.
So do you think the trend for inflation will head downwards, or is this just going to be a one-time tick of a downtrend in inflation, post which, you know, it will resume its uptrend, both on WPI as well as on CPI?
It's a little difficult to say at this point, because I think a lot of the movement, both up and down, is because of fruits and vegetables. And what's happening on other items, the so-called non-core side, as well as on food cereal inflation, remains to be seen. You know, I'm a bit worried on one side, which is on the fiscal side, because, as you know, high fiscal deficit does contribute to inflationary pressures, and so far, you know, for the data that we have up through November from the government's accounts, the centre's fiscal deficit is running probably at something like 8% of GDP, if you take 8 months data, and as you know, the so-called red line laid down by the finance ministry is 4.8% for the full year. I do hope we get close to that, but what I'm worried about is the quality of that compression in the last 4 months of the year, fiscal year, is going to be very poor in the form of not real compression, but postponement of things like subsidy payments and other payments due from government, including tax refunds and so forth, as well as possibly you might see a towards the end of the fiscal year, and we're really talking about the next 2.5 months, a sudden recourse to further borrowing from the market. If that happens, then that will put pressure on interest rates on an upward basis. So I'm worried about how the fiscal deficit is trending. There is also the broader question of if the fiscal correction is seen to be somehow too artificial or too insufficient, that it might have negative implications for a credit downgrade, which would, of course, have wider repercussions.
Okay. Point taken. Dr. Acharya, just wanted to expand the point with regards to fiscal deficit then. In terms of a slippage, how much of a slippage do you possibly expect? And in terms of possibly reining in fiscal deficit, how much ever the government could possibly do, what is the repercussion that we could see on GDP growth then?
Well, look, I mean, I think I'll be repeating myself. I've already gone over this ground. I mean, it's very difficult to talk precise numbers because it's a question of not just what number gets presented when the interim budget, which is what it will be this year, gets presented to Parliament, but also what is the quality of that number. So I mean, you could have a number which is quite close to 4.8% of GDP, but you know, it may essentially be arrived at by, as I mentioned, doing essentially a lot of fudging. You know, you don't pay a lot of subsidies which are really due, whether it's to petroleum companies or on the fertilizer subsidy. You hold back, which is already apparently happening, one hears in the newspapers.
Sure, Dr. Acharya, that point is taken. If we could just, focus on what sort of repercussion we could see on GDP, if in case there are extensive planned expenditure.
Okay, sure.
Yeah.
Yeah, I mean, like the tightening on the expenditure side,
right,
which might be quite sharp, that will also have negative implications for GDP. I mean, let me put it this differently, that I think despite what has been said repeatedly by government spokesmen about the second half of the financial year being an uptick on the GDP growth side, I don't at present see it coming for partly the reasons on the fiscal side, but more importantly also that all the data so far don't really show a significant uptick except for exports, which are still a modest part of GDP, as you know. I mean, if you look at also the recent PMI numbers that have come out, the pre-manufacturing index and so on, these don't look too good either, either for services or for manufacturing. So as far as I'm concerned, I would be surprised if GDP for the full year in the advanced estimates, which come out, as you know, in beginning of February, show anything higher than 5%, and it could even be below 5% for the full year.
All right, Dr. Acharya, thanks so much for stopping by and throwing some light on a lot of the key issues that the economy is plagued with. Thanks so much for joining us.